Good afternoon, everybody. Welcome to the Trader Merlin Show. It is your weekend edition, as Lisa's wondering. Yes, I am going to be traveling tomorrow, so I will not be doing a show. The market's open tomorrow. There'll be plenty of activity. I most likely I won't be a part of it. Guarantee I won't be doing a show for you. I may actually make some trades tomorrow. We'll see how that one goes. It is show 887 of the Trader Merlin program. Thank you guys so much for joining me today. I'm going to do something just slightly different here today. I was toying around literally 5 minutes ago with some graphics that I might try to incorporate this in and make it a component of the show. It just does a little bit more production on my end, but I think, I don't know, maybe something different that keeps at least the flow going, because I tend to get scatterbrained with whatever topic you guys want to discuss, which is always great. But let's start off with what our trading week wrap-up is going to cover. Obviously, we'll talk about specific things that you want to look at, but our graphic here, I try to incorporate some of the bigger pieces that happened today, and we'll start things off with, I'm going to try to build this out. It's going to be a little bit, I want to change the colors, but again, I just put this together, literally finished 60 seconds ago. So what I want to do is start with a graphic and then work my way through to the topics, almost like an ESPN Sports Center. If we look here, I don't have no whiskey, Jimmy. I'll start things off. On the right-hand side, I'll keep a list of the hot topics that's going on. Some of you may have seen the discussion around Apple and their federal lawsuit. As I have learned firsthand, federal lawsuits are ugly, they're extremely expensive, and typically the government doesn't lose. They have unlimited budgets, and hell, at this point, they want to spend money to keep that economy going. So let's drag this lawsuit out as long as possible. Now, the antitrust issue is not just a United States issue. This is also international, and this has gone on before. We've seen this issue before about antitrust for Apple, that they've gotten so big and they've been blocking out competitors from accessing specific features on their phone. And one of the big issues is someone like Spotify, who has their own fee structure, and maybe they want to offer deals or no deals. If they go to the Apple store, you can't just sign up for Spotify. You have to do it through the Apple Store, which can impose their own fees. So it creates this unfair competition, they say, where you're actually competing against the vendors that are listing on your application. Now, is this antitrust or just aggressive business? I don't know. I'm not a lawmaker. Bottom line is, it's hurting Apple. And, someone asked me a couple weeks ago, what are my thoughts on Apple? And I was like, look, it looks like the weakest of the bunch. I feel like this has been telegraphed. If you notice the chart here, this is your daily. Let's just go back. Let's go back to the beginning of 2020, right? This goes all the way back to the beginning of the pandemic, where it had an initial drop, and then from then, absolutely just surging, right? Right before the pandemic hit, Apple was at $81 per share. Today, we're at $171, and that's well off the highs of right around 200. Yeah, right around 200. So if you look at this chart, and I'm going to keep this here and bring up a few others, you notice what appears to me, at least in my opinion, dragging this market down. Now, I know the Nasdaq's not going down. Nasdaq's at all-time highs again. However, this is such a big component. What it means is that the other companies are carrying a bigger weight to the upside. So here is the Apple chart. I'll zoom in here in just a second, but let's take a peek at the Nasdaq 100. Notice that chart significantly different, right? Back in, you go back to the pre-COVID peak, Nasdaq 100 trading about 237, and here we are at 434. So it's a hefty rate of return. But if I zoom in over the last year, since let's say 2023, notice how the Nasdaq 100 looks strong. It's making higher highs, higher lows. That uptrend is unobstructed since October of last year. Fantastic. When you look at Apple, totally different picture, right? Going back to October of last year, yes, it had a rally up, which brought it back to its current highs, but been kind of slowly drifting lower and lower. And, I made the point a couple weeks back that if you have to make a decision on Apple, you have to go with that current trend, which is lower highs and lower lows. Stay short Apple. This antitrust litigation could drag on for some time, and bottom line is it's going to hinder Apple. It's not like I'm not conceding and saying that Apple is going to lose this thing no matter what. It doesn't matter. You may have all your ducks in a row and be able to win this lawsuit. However, the fact that governments will not settle anything quickly and they continue to drag it on and drag it on and drag it on will have an impact on Apple. And I think that's probably why you're seeing this persistent sell-off for the past few months in Apple, is people realizing that the prognosis going forward, 6 months, a year, 2 years, is a bit of a handicap for Apple because of this global, multi-continent litigation that's going to be going on. Now, if this does happen, if they get smacked down from the European Union or they get smacked down from the United States regulatory-wise, you could see some significant downside moves in Apple. So, if I had to make that proverbial gun to the head choice, I'd be short Apple. I wouldn't want to be looking at it long at all right now, knowing that A, it's weak technically, and B, the future does look very uncertain as far as Apple going to. If Apple drops, will the indexes fall? That's the point I'm trying to get to here. Remember, it was the biggest. Let's check and see if this has switched. It's been leapfrogging with Apple as the biggest company in the United States. We know that has changed, and NVIDIA has really jumped in there rather quickly. But let me just bring up the screener, and I'll let us know if it is in fact still the biggest. And survey says, so Microsoft is, $500 billion bigger than Apple. So Apple's been losing quite a bit of market share. Notice how quickly NVIDIA is just about to become the number 2 biggest company in the United States. That is just incredible that could possibly happen. Fantastic. Great for anybody who's holding NVIDIA stock. I know we got quite a few people here that are holding that one. So that's awesome. So if Apple does drop, remember, this is the second largest component of the NASDAQ 100. It's the second largest component of the S&P 500, I believe. I can check those if you guys would like me to look at that. But this does not paint a good picture for the equity markets because it's one of those magnificent 7. If it continues to drop, or heaven forbid it should have a big drop based off some settlement or persistent litigation, I think it does paint the picture of problems for the market. Now, to be fair, the market isn't Apple. It's just it's this lead dog that everybody looks at. But let's look at the biggest factor out there, Microsoft. All right, here's your biggest component. Microsoft all-time highs yet again today. I think a lot of this is the expectations about what Microsoft is going to be doing with AI. They're really doing some great projects. I have some friends in AI who tell me that Microsoft is doing some amazing things that are going to come onto the market here soon, and I'm excited to see what those in fact are. But that Apple news is not impacting Microsoft at all. And Microsoft actually almost looks like the inverse chart of Apple at this point, just keeps making higher highs. So you have one force pulling down, which is Apple, another big force pushing up, which is Microsoft. In this case, Microsoft would win simply because it's a greater weighting in the indexes, right? So if it weighs more and has more impact and it's pushing up, it should negate those declines that we see in Apple for now. But what else do we have? We've got Meta. Again, Meta, all-time highs yet again. So while I believe Apple could bring the market down, it's this isolated island that's being hit with litigation. Meta's looking great. Microsoft looking great. Look at Amazon, looking fantastic as well. You could go to, dare I say, Netflix. I mean, all of these are looking absolutely fantastic. So, it does make me feel a little bit nervous for the broader market because Apple has historically been that number 1 component for a long time. However, it's now starting to lose its luster. And as long as these other major tech firms, let's look at Google. We didn't look at Google. Remember, Google was showing some weakness. Sorry, Alphabet. They've bounced back nicely from those lows a couple of weeks ago, down around 130. Here, Google's back up to 148. Still a little bit weak, but the other ones I just showed look fantastic. And then you add in NVIDIA. NVIDIA just continues to truck to the upside, looking fantastic. So, even though Apple is got a real rocky road ahead of it, it's been looking ugly for the past few months for sure. Normally, I would say, it could bring this market down. However, everything else seems to be pushing higher. So it's almost like it's just erasing those impacts from Apple. Who knows? We may turn at some point and all of a sudden go, see, market's tanked. It's because of Apple. Just keep that in the back of your mind. If you're, really bullish, you do have one of the major magnificent 7s in a painful situation right now and potentially even much worse. All right, what did I got here? Yeah, Microsoft is the largest now, over $3 trillion market cap. Lisa, we bought a movie online and opted to download it to my daughter's iPhone. We did not buy the movie via the Apple app. We were blocked from moving. Yep. Yeah, that's Apple for you. All right? Apple locks things up. It's why people always give me a hard time because I hate Apple, yet I have an Apple Watch, I have an Apple phone, just because of its simplicity. I don't like it. If Samsung was a little bit better, Samsung's more open, or even the Google devices with Android, I need to play with those more. If I could connect that to all the things that I do, I would happily switch. The challenge with having things like an Apple Watch is I do some health challenges, and sometimes you want to share that information and be competitive with these devices, and everybody's got Apple. Maybe this will be that push that drives people to different technologies, different companies, and maybe see a surge in Google because of that. Tom says, could you imagine a car company that forced you to use their gas, their credit card, their oil changes? Yeah. Some companies do that. I mean, if you look at a car company like Maserati, you kind of have to take it to the dealer to get the oil change. They're not going to change their oil at Quickie Jiff or Quickie Lube or whatever they call them. Yeah, that's what Apple's been doing for a long time, and that's why I have been A, anti-Apple forever, and B, I can't trade Apple because I just lost money with it. So, Margaret, Apple does overcharge for a stupid iPhone. Yep. Because they know they got you. They know they have you addicted. I mean, I'll be honest, and I think everyone here would agree. If you disagree with me, I really want to know why. But this device that we hold in our hands every single day is probably the greatest technological invention of my lifetime. I mean, you think of the amount of things that you can do from this. I can run an entire business. I can book travel. I can stream live. I can do so much with this thing. Do they overcharge? Or is that the cost of ease of use, the cost of convenience and connectivity? This is a pretty amazing. The cameras now are just as good as some of the stuff they're making motion pictures with. It's pretty phenomenal. So let's see. What else I got here? We need to delist Apple from the indexes. Probably fixed. No. Apple won't get delisted from these indexes. Come on, man. Pepe, I didn't think you did drugs, bud. Did you just pack a big fatty there? That's Apple getting delisted from the indexes. Forget it. Not going to happen. Android phone has the best cameras. So I've heard. My good friend's a photographer, and he swears by the Android phone. Great. All right. Let me see here. Let's go into my second topic in my ESPN type. So that's Apple. Again, just something to keep an eye on. And don't worry, I'm going to change all this. This is just quick. You guys let me know if you like the idea. Our next piece here is going to be that Reddit IPO, and I meant to put the Reddit logo here. So they did their IPO. And it was pretty entertaining because, as I've mentioned many times, the process of an IPO is you generate as much hype as you can. The underwriter for this, whoever wants to be the underwriter, they have to make you think that this is the greatest IPO that's ever happened in history, and you better be a part of it. Did they do a good job today? The answer is a resounding yes. So the strike price, the opening price, let me rephrase that. When an IPO comes to market, there's a price that the group, the underwriters, and the company says, that's what our strike price should be. We should open at this price. That price for Reddit was $34 per share. Now, is that high, low? That's to be debated. That's what everybody in the industry says. It's $34 is what it should come out at. And you notice the PR firms did a fantastic job today on Reddit because, as you can see here, the first official trade that happened on Reddit was at $47. So already they got way more money than they were supposed to, right? Went from 34 to 47. So they got $13 more per share. That's over 25% more, almost 30% more per share than they thought they were going to get. At one point, we hit an intraday high on Reddit. Excuse me for the beeping. People are sending me messages. We got an intraday high of $57.80. I mean, remember, 34 was their agreed upon what their valuation was. We almost doubled that intraday. So this is why I tell people stay away from IPOs. In my mind, what you should do is wait about 30 days. And if you still see this extremely high valuation, let's say Reddit's at 60, 70, 80, $90, then I'm going to start looking for shorts. And the answer for that is simple. Be like, well, it's going up. Why would you want to short it? Because they said it was supposed to be $34 per share. That's all the fund managers, all the analysts, everybody are kind of agreeing $34 is it. And now all of a sudden it's going to be significantly higher. Typically with IPOs like that, you do see a drop back down in price over time, getting back to some normal level. So that was an exciting one. It's good to have a successful IPO out there today, but don't fall for it. Don't jump on it. I'm a little bit skeptical on it. I try to use Reddit. I don't get the whole, I don't know. It's not a place I usually go get information, but I know a lot of people love it and use it religiously. So It'll probably do well over time, but keep in mind it's right now significantly overvalued based off of their agreed upon IPO price. Okay, moving down my list, we have the Reddit IPO. What do I have next on this one? Oh yeah, home sales. Okay, so there's a couple pieces here, and some of you may know more about this, or most likely do know more about this than I do. And what I'm referring to here is there have been rules that have been changed with regards to realtors' commissions. It used to be 3% for the listing agent, 3% for the selling agent, thus 6% extra you're paying for the sale of the house, which I am definitely in that camp of that's an absurd amount of commission. You're spending a lot of money for them to do that, where I could go and find other sources to either list that property or have the documents prepared for me and do it myself and save a tremendous amount. Now, that said, my father is a realtor, so please use a realtor. I got to solicit, especially if you go to Sonoma County, look me up, call my dad, you want to buy a house in Sonoma. But there's some rule changes here that I was a little sketchy on how it all worked, but basically those fees need to be now removed out of the transactions and disclosed separately. And now it's all of a sudden opened the door to negotiations. And the fear is that for a lot of realtors out there, that it's going to start to cut into their bread and butter, which is getting that 3% on the front end and back end of a transaction if you're listing and selling that same property. So what that means is companies that benefit from the listing of these properties like Zillow and Redfin are probably going to take a hit, because that means less marketing budgets that people are willing to push onto these sites. It also means that kind of do-it-yourself places might do well. And that might mean that companies like Toll Brothers, Lennar, other companies that are selling directly may do better and be rewarded for that kind of drop in commissions and people doing it themselves. So this piece, it was curious to me because I wanted to see how that would pan out with the existing home sales that came out today. And the belief was that because of these kind of new policies being put in place, that we would see significantly higher existing home sales, more people being able to do it themselves, thus cutting out that middleman. I mean, think about it. If you've got $1 million home and you've got a 6% commission, you have to pay $60,000 for someone to sell that home. That's a lot of money. And granted, some real estate agents definitely earn their keep and are doing so much, but there's some properties are very straightforward. I just need some documents. Let me fill out these forms. Do I need to pay $60,000 worth of real estate commissions? Maybe not. So the existing home sales numbers which came out today were significantly higher than expected. You can see here, I know it's kind of small to read. Let me see if I can bump this up for you here. It was 4 million was the previous month. They expected a drop to 3.95 million homes sold. Came out at 4.38. And I think that has two key components to it. Why I wanted to bring that up and why I think it's so important is you see the big surge here, right? The last 3 months, there's been a significant uptick in the number of existing homes sold. Now remember, there's a lag effect here. So this isn't like homes sold yesterday. This is a month old. And we mentioned that falling 10-year bond, which I will bring up here right now, right? You go back here into this period of time. This is when we saw that surge, right? It was October, November, December, rates were falling, which I believe caused a surge in people to go buy properties, and we're seeing some of those sales come out now. This obviously has a lagging effect. Now, we saw the 10-year start to surge. Let's just call it January 1st is when it rebounded and started to tick back up from those levels right around 3.9%, currently at 4.25%, 4.27. So what we'll probably see in the coming months is the steeper that this gets, if it continues this, will start to hurt those existing home sales. But there's a combination effect here, which isn't just the interest rates. It's the willingness for people to sell, knowing they may be able to save some money on those transactions by negotiating their fees with realtors. And let's be honest, you can negotiate your fee with your realtor. Generally, if a real estate agent works for a broker, the broker gets a set commission. Let's say it's 1%, and the agent gets the other 2%. Well, if the agent wants to cut that down to 1% for themselves, you can now negotiate, get down to 2% commission. So there is some flexibility there. It depends on which agent you work with, but it's kind of like car dealers, You can shop around, you can definitely get a better deal in your car, but part of that is also you might get the best deal in your vehicle, but get the worst service and worst support possible. Some agents do earn their keep with regard to the fee that they're getting. Okay. What does my father say? We haven't had this discussion yet. I don't talk to him every day, so I'll reach out to him and see what he thinks about it. He's on the retired edge, so I'm sure he's kind of like, whatever, doesn't bother me. Let's see. Tom says Reddit has never made a profit in 18 years. Opens at a PE of negative 90. Yes, minus. Sounds like a deal. Tom, what did I say? It's about creating excitement. It's convincing people. I mean, finance is magic. In this case, your job at the underwriter is to convince the world that this is the greatest thing. The Wizard of Oz, right? Did he really do anything special? No, he convinced people that he was a magician, but he wasn't. He really didn't do anything. And to me, that's what underwriters do. So yeah, you're right. And that's not to say that Reddit can't succeed in the future, right? They may start to do rather well, but if the numbers don't lie and it continues to lose money, then I would be looking at Reddit in probably 30 days as a short opportunity once this shorting window opens. Okay? What else do I have on my list? I think I had one more. Oh yeah, FedEx. I'm not sure why I drew this patent de PC. I don't know what's written on there, but actually AI did a decent job of creating this airplane, although that runway looks like absolute nightmare for anybody here who's a pilot. FedEx earnings today. So let's go real quickly take a peek at FedEx, FDX. So FedEx earnings came out and they shattered earnings. I could say that the price of FedEx is off the charts, and I would not be lying. You notice right now on this chart, I'll zoom in here, it's showing the last closing price at $264. That's where they ended today. They were up 1.86%. If I zoom out here, you look at it and say, okay, well, they're doing really well. But the current price is at $298. I'm going to put a horizontal line. It's actually on there, but I want to make it darker because I know it's hard to see my screen sometimes. $298.50. That's where we are right now in the after hour. I'll read the numbers to you here. They were expected to come out with $3.43. They came out with $3.86. So a blowout on earnings. They just crushed it on earnings. And when we look over here to the left, right, this is very interesting to me and something I would encourage you to keep your eye on tomorrow. If you look at this from a supply and demand perspective and say, where is price most likely to turn? We're right there. I mean, really, it's the origin of this gap, which is right around 297 on this one. So it'd be interesting to keep an eye on FedEx tomorrow. If it opens up here above that, 299 or 300 mark, leave it alone. But if it starts to show some weakness, you're gapping up into supply. And again, it hasn't gapped up yet because the market is closed. But we are there as we speak, and that may present a decent profit-taking opportunity for someone tomorrow, which means a short opportunity for those of us who are more active and aggressive traders. So wanted to share those with you. Those were my my few things. I'll color code this and make it a little bit different. If you guys like this style of doing it, I'll try to do it more frequently. If not, I'll go back to my normal, just scatterbrained covering of financial topics as you guys type them in. Big Ev says, but the 6% is split if there is a different buying and selling agent. Correct. Yep. That's why I said you get 3% for the buying, 3% for the selling agent. I've been able to get deals done for 4.5% to 5% if they are damn good. They sometimes get you a better price, right? Absolutely. And again, you got that because here's the thing with realtors. It's a cutthroat business. It's who you know and who you have a better relationship with. I'm willing to bet that just about every single person in this room today knows at least one realtor. I could name, if you include my high school peers, I got a dozen people that I could say right now, I know personally close friends that do real estate. So when it comes to buying a home, what's my differentiating factor? When I look at this spectrum of a dozen good agents, it depends on where I want to buy, of course. But let's say I go back up to Northern California, where most of my friends live and my father lives. Well, obviously, I'm going to take my dad. My dad will be my agent, period. I don't care what rate he charges me. My dad's getting my business no matter what. But if I had a choice between it now comes down to a couple things. It comes down to commission, right? Who I maybe have the better relationship with. If I have someone who's going to say, all right, I won't charge you the 3%, I'll give you 2.5%, and they both do that, now I need to go and say, hey, which one do I feel better with, right? Which one do I think is going to be the best route for me to go? And that's tough. That typically what happens, they start to drop their commission rate. Okay, I'll give you 2%, right? And that's Big Eb. Big Eb did well. He went from 6%, which is the norm, historical norm, got 4.5%. If you save 1.5% on a transaction that's $1 million, that's $15,000 in your pocket for free. Like, yeah, why not? Shop around. Margaret says most are part-time. Yeah, unfortunately, my dad made a living on it. He was full-time realtor my entire life, and he's very good at it. I have done several deals with agents that weren't my dad. Like I bought some properties in Texas years ago, and I don't know. I just feel like they just didn't care. They didn't spot the details. My dad is one of those, like, the devil's in the details, and he will get you not only a great deal, but he will be straight up about everything. And I appreciate that, which is why not only would I use him because he's my father, but I think he's probably he is the best agent I've ever worked with, and I've worked with at least a dozen different agents. We had a pretty good one up in Shasta. Was very good at what he did, but yeah. It seems like most of the big seven are forming a rotation to the downside. Just tuned in, maybe already covered it. I would disagree with that, John. We just talked about that, a rotation to the downside. You could type in the chat there, John. What are your big seven? What are you referencing as a big seven? Obviously, Apple, which, yes, we did look at this. And this one, I would agree with you. It does look like it's starting to show some weakness, rotate to the downside. You know, if we get below these lows we established a couple weeks ago, let me put a line on this one, which to me is the line in the sand for Apple. That's 165.67. If that gets broken, I think that triggers a lot of selling. A lot of selling. All right, so yeah, that one looks bad. But going through the Magnificent Seven here, that was Microsoft. I don't see any rotation. I don't see any turning to the downside. This couldn't look any stronger, honestly, right? You show me what's weak about Microsoft's chart right now, and I'll buy you lunch. There's nothing weak about this chart. All-time highs. Yeah, it's beautiful. Google. Yes, this is Magnificent Seven, but you know, it had that weird pullback because of their wonky AI and how it was woke and all that stuff, which I was like, okay, garbage. AMD is not part of the Magnificent Seven. That's not the big seven. Microsoft is, but AMD is not. But we could go AMD. AMD, honestly, still looks great, doesn't it? It had a pullback, but the trend is still up. It's still making higher highs and higher lows. So all in all, I feel okay with that one. That one still looks good, even though I wouldn't call AMD part of the big seven. Big seven is Meta, which is all-time highs. Amazon, which is all-time highs. Netflix, which I don't think Netflix should be on there, but it is. I mean, everything here is looking fantastic. So, yeah, I only one that's real weak there is Apple. And then second, I think that you're looking at Google as being the second weakest on that list. But all in all, you know, this market is incredibly strong right now. It's unbelievable. I told you yesterday I got stung with the going against this market, which is definitely a risky proposition, right? I gambled on that one and I got beat yesterday. Trying to short this market. Of course, maybe I should have waited till today. If you look at the way the Qs acted, you know, you got a nice big looming red candle up there. Broke all-time intraday highs, all-time closing high. Yet that candle looks pretty red, and unfortunately, I tried to short it yesterday right in here. So, oh well, it happens. All right, let me get out of here. One other thing I want to add before I go into my top seven, and I'm not going to do an hour show today. SLV, I did sell puts today on silver. I sold the April 19th puts. Let me put a line on here. What price I got my strike at. Here at 22.50. I did the 22s, if I remember correctly. Yeah, I think I did the 22s, which puts me down here, which is that last little bottoming tail here from about a week ago. So you're probably wondering, well, why there? I want to get back into silver. I still have a bunch. I have 8,000 SLV shares currently that have calls against it at 23.50. But I was going to add some more just because I've done very well with silver. I do think that inflation is going to tick back up. I do think that commodities like gold and silver are going to start to rally here again. So I'm happy to buy some pullback here. I hope I get exercise at $22. I got 26 cents worth of premium on that one. So it's a little over 1% for less than a month. So not too bad. Lisa said about a SPY put today. You know, the good news for you on that SPY put is the premium was probably pretty cheap, right? You didn't pay much for those because it's just who's buying puts at this point. The challenge is you are just throwing darts trying to pick a high, right? There's real no logic behind, oh, this is the peak of it. There's not coming into overhead supply zone. There's nothing really off the left of the chart that we could even, you know, consider as being an overbought situation. So definitely risky there, which is why I like that you just said a put, just one. For me, I actually was getting confirmation yesterday when I was trading the Qs that we were gonna start to sell off, and it did, and then just came ripping back up. So, no, NVIDIA is in the manipulated 7, not Netflix. AMD is actually quite smaller to NVIDIA in revenue, quite similar. Yeah, but the Magnificent 7, or you could call it the Four Horsemen, and then it was the Magnificent 7. If you go through what the industry is calling that, it's Microsoft, Amazon, Apple, Meta, Google, NVIDIA, and Netflix. Those are your 7 out there. Yes, Big App, I sold SLV puts today. I did I do 4,000? Or sorry, 40. Yeah, I think I did 40 puts today on SLV. So we'll see. Got a month on that one. Let's see. Please says, these days I do all the house researching and call the agent and set up a showing. Yeah, pretty much the agent doesn't really do much, right? Yeah, I remember the early days of real estate agents before internet. You know, they would take you in the car and you'd have all the pages of different properties to go look at, and they drive you around and buy you lunch and stuff and cater to you. Now, I went to buy a house in Big Bear, and I had a referral for an agent up there, and the guy was trash. He was absolute garbage. He was basically like, "Are you going to buy this or not? I got things to do." I'm like, "Yeah, I am going to buy this house, but not from you. You know, you're completely unfriendly." Anyway, that was my market highlights. Those are just kind of the 4 big things. I did want to include that silver trade on there. Let me run through our top 7 here, and then we'll run to the exits here and look at wrapping up this day. Do you sell a lot of options? I don't know if I would say I sell. I mean, what's a lot? You know, I have my 2 biggest accounts are in the umbrella of what I call 1% strategy, and in there, I'm probably going to write anywhere between 40 and 80 puts per month. In those 2 accounts. Depends. Depends on how active they are. Depends if I've been assigned. So actually, per account, 40 to 80, depending on. So I could be writing anywhere, let's call it 100 a month in those 2 accounts. So that to me I would say it's fairly active. And outside of those, I do some directional. So you'll find me, buying puts, buying calls directionally, but most of my activity is done in my 1% accounts. From Fortune, Alphabet, Apple, Meta. Isn't that what I just said? Alphabet, Amazon, Apple, Meta, Microsoft, and Tesla. I'm sorry. You're right. Thanks, Tom. Yeah, Tesla replaced Netflix, which rightfully so. I mean, come on, Netflix. Let's look at Tesla real quick. I'll keep you updated on the other trades that I currently have open. I'm still enjoying Rivian. So Rivian is just kind of sitting there, which is fine with me. I'm down on this one, like, I think 15 cents. I think I bought it like 11.31, 11.32, somewhere in there. I did not sell more puts. I was thinking about selling some more puts at $10, but the premium I collected puts me in the money on this one, and I'm happy with it, and I've been selling calls against it at 14, so we're collecting a little bit of premium there as well. You guys saw Go EV again today? I mean, geez Louise. I don't think I could have been luckier. This was not skill. This was not, hey, I'm a great trader. I'm not boasting. Please don't think of that. It's not like, see, I told you. There's a lot of guys that have trading schools out there that will look at this and go, see, I told you. This is amazing. I'm such a great trader. No, I got lucky. My hypothesis for Canoe was something that was going to be like a 6-month to a year swing to get back on track if they can get out of bankruptcy and not fall into bankruptcy. 253% swing in 4 days obviously was not on my radar. And I still think that there might be some upside potential here. Big Eb says, did you do anything with ARM? I did. I bought puts directionally. I can't off the top of my head remember exactly when that was. I either did that on Friday the 8th or Monday the 11th. I think I did it the day it actually broke down here below. No. I can't remember exactly the day I did Big Up, but I did buy some puts on this one, and I think I actually have the 100 strike on ARM. Now, a couple of you guys have been asking me about ARM and saying, hey, the float numbers have changed. Remember, we talked about that. Let me bring that up for you guys real quick, and we'll bring up the ARM. There was a huge amount of shares that were locked up. So remember, you have open interest and you have float. Open interest is everything that's out there possible. Float is what's available to the public. And remember, the lockup period ended just a couple days ago. So let me go to ARM. So now those shares that were locked up should be a part of, I'm bringing up the page here real quick, should now be a part of the float because now they are able to be sold. Before they were not. So that gap should have been closed here. There must be a lag effect here because I've seen other numbers where this gap is closed. It was 96 million was the float and 1 billion was shares outstanding. That number has closed. I don't think that it's even, but it's definitely gotten a lot better. But I don't see it updating here on Apple or Yahoo Finance just yet. We might be able to find that on another site. But yeah, once those shares get unrestricted and become unlocked, they now become part of the float. And that's why I still believe that ARM is going to have a sell-off because you got so many people that are going to be willing to take a profit here. So I am still short. I believe I put a vertical line. No, I didn't. If I remember correctly, I bought myself 90 days on this one. So I gave myself a little bit of time. I'll have to go look and see. It's in a different account I don't have access to right now. But on the Monday show, I'll put the lines on here and tell you the strike and all that stuff just so we can see how that one pans out. Right now, I'm losing a little bit. I still have time on my side. It was looking decent for a few days, and now it kind of popped back up here. But we'll see how it does by the end of my expiration here. So I do have some time on that one. Let's see, Michael. HPA is the father of AI since NVIDIA buys servers with AI and other AI products, which HP is cheaper of all AI. I don't know if I necessarily believe that, Michael. You're telling me that HP is the father of AI? I don't know if I buy that at all. I don't know what headline that came from or where you read that, but HP certainly been in the industry forever, but I don't necessarily think I would call them the father of AI. You could easily point the finger at someone like IBM as being the father of artificial intelligence with Watson and other systems like that. And I don't know. I don't know who's the father. And honestly, who cares? It's really about who's the leader. And you probably bring that up because you probably own HP. Okay, so here's the chart of HP, which has pretty much gone nowhere for 3 years. And you can see it's just been oscillating back and forth here. I'm a trend follower. I'm someone who believes that the trend is your friend to the bend at the end. And in this case, I don't know. I wouldn't buy HP. Let's go to IBM, which I don't trade either. Right, that's one I'd be interested in. And I think we talked about this way back here, saying if we start to break higher highs, go for it. And IBM has, for whatever reason, had a resurgence. And since 2023, it's been a phenomenal chart. You're up like 80%. So this is the type of thing you want to buy into, not something that's floundering sideways and doing nothing. Not that I want to delay you. It's all right. But I sent you an email over, the weekend about ARM. Are you still in the short? I am still in the short. Yep. Yeah, so Liz, yes. That's kind of what I addressed right there. You should see the float and outstanding, the gap between float and outstanding shares get much smaller because those shares are no longer locked up. That's the point I was trying to make. And when I initially presented that to you, I was like, look, you have this huge separation here between float and outstanding shares that will close. And what that means is those shares that are outstanding that aren't available to be bought or sold, they're frozen. But now they're unlocked. So those can be dumped on the market at any moment in time. Before they could not be sold. Now they can, which means supply factors just went up exponentially. And yes, the chart still looks decent on ARM. Right? Oops, let me get the right symbol in there. The symbol, the chart still looks good. But one of my big arguments on ARM is its IPO price was supposed to be $51. That was just back in September of last year. This stock should have been worth $51 per share. Instead, it opened up at $56.10, which is 10% higher. And here we are at $131, which let me just go to, based off of the opening price, the first day that it traded, it's up 142%. If we go back to the agreed upon IPO price by underwriters, we are currently 164% higher than what they thought it should be, which is normally inflated anyway, back in 2023. So not only do I think that ARM is overbought at this moment, overvaluated, of course, it's all on hype and AI dreams right now, but you have all that extra share coming into the marketplace, which to me lends a higher probability of prices moving down. So I am short right now, and I could lose that. That's fine. But yes, I am short. Okay, I'm gonna wrap up here. I know you guys. What's you guys taking the over under on doing an hour show today? Backlog on Nvidia is $3 billion. What they said on earnings. Oh well, look, 90+% of the chips for Nvidia don't come from Hewlett Packard. They come from TSM, Taiwan Semiconductor. This is where they're getting all their business from. Now, I don't know whether you mean that HP is buying NVIDIA's chips. That would be a totally different story. But Taiwan Semiconductor is what's powering NVIDIA. Microsoft introduced a PC according to an AI PCs. I'll check it out. According to FinViz, on the weekend, the gap had pretty much... Oh, let me check on FinViz, because I do want to see that. Maybe they just didn't update the numbers on Yahoo Finance yet. Let's go type in ARM here. And we'll just look at float versus outstanding shares and see what that number looks like. So let's go, give me a second to find it in this maze of numbers here. Shares outstanding, 1.03 billion. And float, that's short float, shares float. So there you go. So yeah, to my point, before you had, 900 million shares that couldn't be sold. Now all of a sudden they can be sold. And therefore, to me, that poses a problem. HBA made 0.48, which beat the, okay. Going to be a powerhouse after the deal is done. We'll see. There's the old joke about the guy that comes in for the chief financial officer job at a corporation, and the CEO looks at him and says, all right, read all these numbers here. Here's all the financials. How much are we earning per share? And the guy says, oh, you're earning 37 cents per share. He says, okay, goodbye, thank you. The guy leaves the room. Next one comes in. What do these numbers say? It says you're making 45 cents per share. Okay, leave it. Third finance guy comes in. He looks at it, looks back at the CEO, and he says, some interesting stuff here. What number do you want it to tell you? So to me, that's the whole world of finance, CFOs. If somebody says they recorded 50 cents worth of earnings and it was supposed to be 48, I don't know. I don't trust it. I don't trust the numbers. I think it's all a tactic to get people to buy and manipulate buyers and sellers. I'm a skeptic on it. So I don't care if HP made 45 cents or 48. You look at the price chart, and I don't care what they do. I don't care how they do it. If you look at HPE, that chart, other than this big surge you had here off their earnings, which, as you pointed out, they were supposed to make 45 cents, they made 48. So they beat by 5%. Well, if you're looking for someone who beat earnings, then why don't you go with FedEx that beat by 12%? So I don't know. I don't necessarily play that piece. I'm looking at this price chart, which looks like if I lock my money in Hewlett Packard right now, it's just going to oscillate back and forth and go sideways for a while, and that's a waste of my time and money. But they have available all week. Yeah. No, I know, Liz, and I said that. I said, look, the probability in my mind was higher that they would be selling off. They're not. I think you will see it come, but I could be wrong. You now have all this extra supply in the marketplace. Could be a dangerous thing. All right, let me get you guys your economic calendar for tomorrow, because I will not be here. I will be on the road. Here is what we have cooking. So you've got Fed Chair Powell be speaking tomorrow, and if you ever want to know what he's talking about, you can click here on the little box, and you can see he is going to do the opening remarks for the Fed Listens event. Okay, great. This one shouldn't be that important. We already know what he's going to say. But tomorrow we also have, for the U.S. markets, goose eggs. No, we got two other members here, but there's no earnings. There's no earnings. There's no major economic announcements happening for the United States. We do have a Euro summit all day tomorrow, and that may have an impact on our markets. If you're trading the British pound, you have retail sales, and that, my friends, is pretty much it. Michael, when you say IoT, are you referencing a specific security as an IoT stock, which is Samsara? Or are you talking about the Internet of Things, the actual technology of IoT? Those are two very different platforms. I don't know Samsara, but the chart looks great. Samsara's chart looks, if this is what you're asking me about, Samsara's chart looks fantastic. All right, still not a ton of data. You've got 2 years worth, but that trend's been fantastic. So higher highs, higher lows. The trend is your friend. Go long Samsara and call it a day. That one looks good. If you're asking me about the Internet of Things, which is IoT in the digital asset space, I I think it has tremendous potential, but I don't see it being used right now to its fullest extent. But keep in mind, you have Tesla creating a robot, you've got NVIDIA creating a robot, you've got Microsoft creating robots. When we have those technologies competing, you will have the Internet of Things. Your robot will be able to communicate with external services and pay for different things using a digital asset account that you set up for your robot. And I think that it's going to come much quicker than we think. All right, that's going to do it. I could get dragged in here and keep going, but I am not. I'm going to fight the urge to go into all these questions. But thank you guys so much. Hope you enjoyed today's show. Cheers to all of you. Unfortunately, I don't have a glass of anything here. I'm going to have a beer later on, but I will be off skiing tomorrow, so and the weekend, so I won't be here. I will see you all on Monday. If you have something you want to discuss, I had a really good question from a viewer, which was, do you think that AI is going to ruin trading? So I will next week do a show at some point next week on the implications of AI on the financial markets and trading. What I would urge you guys all to do is to not fall for the hype. I have received several requests from people who are very good friends of mine asking me, what do you think about this AI trading platform? They're making 50% per week. It's like, dude, you're falling for another scam. I mean, I have one friend that I swear to all that is holy, I swear that if someone has a scam available, he's interested. Like, if you have a scam, guys, I'll give you his name and number, call him, he'll buy into the scam. It seems like every single thing he brings to me, I'm like, bro, that's a scam. How do you not see that? You're not going to make 20% per week consistently. Can you make 20% per week? Sure. Yeah, absolutely. Can you do it consistently? Probably not. If you did, you wouldn't be talking to anybody. You'd be sitting in your house making 20% per week, and you'd be a gajillionaire. You would pass Elon Musk if you compounded at 20% per week. You'd probably pass Elon Musk as the richest man in the world. My guess is within a year. Maybe not a year, but pretty damn soon. All right, everybody, that's going to do it for me. Thank you so much. Hope you enjoyed it. And let me know what you guys think of this silly little format to do the, kind of ESPN piece, if that makes sense or not. Maybe I'll do it. I like it because it keeps me grounded and structured as far as what I want to cover on the next segment, but we'll see what you guys think. So email me at TraderMerlin@gmail.com. You can leave comments down below any of the YouTube videos, and I will get to those. And thank you guys so much. Have a fantastic weekend. I will see you next week.